I think everybody knows we're at the end of the dollar era.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault. My name is Shane Moran, and I'll be your host for this episode. And from the entire Live from the Vault team worldwide, we want to thank you for your continued support. And as you can imagine, the community keeps growing more and more every single week. And there's a lot to talk about during these historic times. And we've got Andrew Maguire in the house and a returning guest, an industry expert, and by popular demand, it was you that decided this. This is awesome. We've got the one and only Robert Kientz from Gold Silver Pros in the house, and we'll be talking gold. This is going to be an amazing episode, and you won't want to miss a word right here on Live from the Vault. You know, Live from the Vault gives you access to information and updates that you just can't get anywhere else, and this episode is no exception. So just before we go to talking gold with Andrew Maguire and our special guest, Robert Kientz, please help keep spreading the word about this channel by hitting that like button right now, and then share this information with people that you know, and hit the subscribe button, of course. And if you want to be notified in real time as each episode goes live, click that bell right there, and we'll do that for you. So let me introduce our special guest in case you haven't heard or haven't met Robert. Robert Kientz has been covering the precious metals sector since 2009 when he published the book Drop Shadow and the Truth About the Economy. And since then, he's written his written works have been featured in multiple online outlets, including Seeking Alpha, including Alpha Financial Sense, also Yahoo Finance, Market Watch, the NASDAQ, Oil Price, and many, many others. Mr. Kientz started Gold Silver Pros as an educational service, and he discusses and analyzes the latest research news, which he publishes on various social media outlets. And you're going to love this interview. And with that, let's head over right now to the UK and talking gold with the one and only Andrew Maguire and our special guest, Robert Kientz. Over to you, Andy.
Well, you know what? This is actually a buzz for me because I really like Rob, and he is definitely one. I tell you what, that Texas produces some really cool people, and as I say, I was saying to Rob, if there's any place in America I'd want to live, that would be Texas. There's some, and you're my favorite cowboy.
Oh, thank you.
A warrior, an actual warrior out there, and I love what you're doing. I've seen you. You've popped up on, and you've been up there standing in the front line. You're willing to take on anybody, and I know you've taken on everyone from Jeffrey Christian to others, and But again, it takes balls to do that, and a lot of people just shy away and just try and muddle along. But Rob, what a pleasure to have you, my friend. And there's so much to talk about, So, and I know you've been doing quite a bit of really good work on the IMF digital currency. So maybe you could explain to people, because a lot of people don't know what the hell that is, and maybe you could go through kind of what that is and what it kind of means.
Yeah, so I think, Andrew, we're headed in an era of, it's the end of the paper currencies. It's, a lot of the European nations had started their central banks in the 1800s. America was one of the last ones in 1913. Of course, with Bretton Woods became the dominant world currency. And then in 1971, removed gold, and the dollar's been this free-floating world reserve fiat currency. I think maybe the first time in history, or at least, in the modern era. And those fiat currencies have come under a lot of pressure because, as you know, there's no gold or silver to limit, the printing. And so governments will print more for warfare, welfare, or anything that they think that they need. And it also leads to misallocation of capital in the economy. And so what's happening is we're starting to suffer the consequences of that. And, we're starting to see bank failures. We had a show last night where I talked about how the American news media is openly talking about the death of the dollar for the first time. I mean, it's open and brazen. And I think that they're doing that, Andrew, to prepare the public for what's coming. I think everybody knows we're at the end of the dollar era. Not that we're into the fiat dollar era, but we're at the end of that type of system. And we're moving into a new one. And what's being built is more electronic. And it's being based upon the same overall technology that is powering Bitcoin and the private cryptocurrency complex like Ethereum and XRP and Litecoin. That type of technology that was developed in the private sphere is now being leveraged by the central banks and governments to develop their own centralized digital currencies. The differences with those is they're not decentralized, so they are controlled by a single body. There aren't necessarily being talked about any natural limits on how much they can produce. It allows them to produce as much as they want. And on the flip side, it allows them to take away as much as they want. And because it's electronic, and because it's being instituted through the existing bank system, essentially what that creates is the ability for them to increase or decrease the amount of money in supply, which is always what economists have wanted, especially the Keynesians. Because if you can control the money supply, you can control the economy at an aggregate level, and that's what they want. That's central planning 101. To central plan, you need to have control of the money supply. And now we have this digital technology which would facilitate them really having just push-button control over how much money is floating around the economy. And for in some cases, this can be seen as an efficiency improvement. They're certainly heralding it as the end of things like money laundering. But the reason why they're saying that is because they will have 100% view into what people spend with these currencies, and you'll have no privacy. And so it allows them basically 100% enforcement. And then the question then is, if you have 100% enforcement, who's making the laws about what's enforced? And is that really promoting freedom? And that's the major concern I have is, when you have somebody on that end that can push a button and kind of turn off your finances, how free really are you? And I would argue probably not very free.
Yeah, I mean, that could even extend to you making a tweet that someone doesn't like. It could extend to anything, really. It could be that, maybe there's a war. We don't know what the situation is. But, and of course, when we make a deposit into the bank as it is now, of course, it's not a deposit, it's a loan to the bank. So I mean, what a perfect situation for these guys. So you put your money in your name into that bank, and then all of a sudden, they can withdraw that or switch it off, or you say something that you shouldn't, and or you go and buy some meat, and no, you've had your quota of meat for this month, so you can't spend your money. So you've got no choice. It's a scary situation. I don't think most people realize how scary this can be.
I don't think they do. And if you want to know how the system could go, and the points you're talking to, just look at the Chinese. They have the social credit system in place, and they're actually using the cryptocurrency with the social credit system, according to their media reports and what their government is saying. If you don't do certain things, your training pass could be revoked, but they can also revoke access to your bank account. And so that's one of the stated goals of the Chinese, is to use this social credit system and the CBDC to facilitate the culture that they want. So they want to manage the culture of the people and manage, the rights and freedoms that the people have. That system, while may fly in China, really doesn't adhere to, especially America, but most of the Western world, which are based upon constitutions and people's rights and things like that. Hard-fought, won battles over the centuries. And it's anti-cultural, I think, to the West system of capitalism and freedom and business and things like that. And certainly, it does raise concern that why would the government need or want these powers? And is the government still within their original remit to what they're supposed to be doing? Or is the government sort of voting themselves or giving themselves an avenue to more power? And what does that look like? And I think, Andrew, if we look at history, we know that doesn't always look great for the people. And so there's that risk. And definitely, it's the right of the people to say, hey, we're the governed, but we elect you. Ultimately, we're the ones that make the decisions. And I think it's time for the people to have a voice. I think it's time for them to stand up and say, okay, let's look at the system and let's have a voice in this. Because it's being pushed, Andrew, from the top down. But I don't know that we've had those conversations as society to say, is this really what we want? And I don't know that we're allowing for other types of monetary systems to really enter that conversation. I think that's the danger, is we're just focusing on this one prepackaged system that I don't think the people, one, understand is coming, or two, understand how it works, or three, the potential consequences. And the only way for us to know that is to talk about it. And that's why I'm so happy to be on your show, And so we can talk about this with people so they can become aware and understand what's going on and educate themselves about it. And that really is the first step in, exercising your freedom, is understanding how things work and understanding what's going on. And then you can make your choices about, and really that's what I want to do, is I just want to tell people so that they can start talking about this and become aware. And even if we end up going under the system, unfortunately, if we do, at least you'll have had some time to prepare ahead of time and maybe make some preparations at the very least.
Well, I mean, we're in the right world for that. Purchasing gold and silver, for 5,000, 6,000 years, it's protected people's wealth. And I think what you're talking about here is first and foremost is protecting one's wealth, and not having it taken away from you, because wealth is more than money. It is everything that goes along. This is the spiritual side of things as well, and to have that taken away by some arbitrary central bank planned entity, which can change tomorrow. There are wars being fought. Things are changing rapidly. But I think in the back of my mind, well, hang on. They imposed a central bank digital currency in Nigeria. Less than 0.5% of people adopted it. They were rioting. They were literally going and draining bank machines. It's not as easy. It's one thing to say you can impose something upon something, but there's always counter pushback, no matter all the way through, whether it's prohibition, no matter what it was. Human beings are creative, and they'll find a way around it. And I think that's encouraging me. Do you think, you think there must be, obviously buying gold and silver is a primary focus. What else would you advise people to take their money out of the bank for a start off, or?
Yeah, I think the recent bank failures highlight the fact that the banks are in a precarious position. I don't really care the fact that they may pass their stress test in the new Basel requirements, because when I looked at the new Basel requirements, they weren't that impressive to begin with. They were improvement about bank liquidity and things like that, and that's new legislation. It came down a few years ago for banks liquidity. It improved it, but the banks are still a very dangerous place to be. And banks are where you start to see signs of stress when you're going through a major recession, a currency change, all of these things. The banks are going to be at the forefront of it. And I do think that a lot of the regional banking system, at least here in the U.S., I'll speak to the U.S., is going to close down. I think it's going to go out of business, and I think we're going to see a consolidation up into probably super regional banks. And I think there's going to be a consolidation in the banking industry, which doesn't speak to consumer choice and those types of things. So I think that kind of pain is coming. So I do think that you have to worry about where you're keeping your cash, and I do think, Andrew, you have to worry about how you're going to be able to transact in this new economy, because we've never tried this before, and there's no guarantee any of this stuff is actually going to work. And to your point in Nigeria, the people rejected it, and they flat out said, this is not what we want. And that's what happened when China first started it too. They had quite a few people sign up, but as a percentage of population, it was very slim and nobody was using it. And there has to be a reason for people to want to use it. So they're rolling this out, and there's no people's mandate. It's a government mandate, and that's why you're not seeing adoption by the people. It's a solution in search of a problem at this point. There are other solutions that we could have the people will probably be more amenable to, and they're not adopting for this reason. And I think probably what will force people into this is when we do have a big collapse, if we do have a big financial reset, I do think it's going to be, if you're not prepared for that and you're not in gold and silver and you haven't looked at your alternative ways of, transacting, you may be stuck in this system and have to adopt it and not have any choice. And so that's why I go back to educating, preparing. They can roll out whatever system they want, but it's up to us to decide whether we want that, whether we choose that, or whether we adopt that. And ultimately, that's our choice, not theirs. And I think that's really where they're having problems. They're having problems getting this system out in different areas that they're trialing it. And that tells you how the people just aren't ready for this and they don't understand it. So if they want adoption of this, they're going to have to make it a public conversation. And I think that's why we saw in the media, I think they realize this, Andrew, and I think that's why the media, both CNN and Fox News here in the U.S. came out yesterday about CBDCs, because I think they're prepping people for that conversation. But I think they're going to try to run it through mainstream media. What I would encourage all of us to do is to have it private conversations with ourselves and with our friends and our own networks on social media, so that we can have a conversation that's not led by the media. The media doesn't tell us what we need to do. They're supposed to be a reporting agency. So I would encourage people not to let the media tell you how to think about this. I would tell people, research it for yourself and decide whether this is something you want. Certainly for me, I'm going to decline to participate unless I'm absolutely forced to.
Well, that's the beauty of these conversations. It's really all about drawing pieces of the jigsaw together. It's about education. It's about, I think ultimately, it is about us being able to take personal responsibility for ourselves, because the central bank digital currency completely removes that object. And yet most people I know, not just in this gold and silver world, most everyday people really want to take responsibility for their own stuff. They get a job, they do stuff, they make budgets, they survive, they work. Obviously, this is against the woke culture, obviously. And of course, we've got 3.8 billion SCO members, another 1.5 billion Africans. You've got billions and billions of people. And China is cleverly removing some of the fences between enemies of this world. And so I think suddenly you've got, and none of this, there's no wokeness going on in there. These pampered wokers out there on this side of the world have no clue that you have to take personal responsibility for yourself, and that in the bulk of the world, where the most people are, with the fences being removed and the ability to suddenly make a living by working together rather than against each other, is a huge pushback against what really we consider the WEF program is, which is basically to really create a situation where you have to break something, because it blows one's mind. You say, there's no logic into these mandates, defunding the police, creating problems, blowing up factories, whatever it might be. Some of it may be conspiracy theory. I don't believe so, but obviously all these things are going on. But the WEF, for them to build back better, you have to destroy it first. You have to destroy something first. And I think while we're doing that, on the other side of the world, China's removing Russia, China, alliance, the BRICS alliance, they're all getting together. Some of these were enemies for years and years, decades, and they've decided it's better to work together. I mean, this is huge, don't you think?
Yeah, I think it wasn't China that brokered a deal between Saudi Arabia and Iran, and I don't know if in the last 30, 40 years, anybody in America would have believed that ever would have been possible. I mean, you're talking about, I don't know if you call them mortal enemies, but certainly for a long time when the U.S. is involved over there was definitely tensions. And I think both of those countries have just realized maybe the United States was, getting in the way of us working together. And it took a separate power coming in and saying, let's try a different approach. Let's try a less aggressive approach. Let's try a diplomatic approach. And you see what happened. So there is a chance for peace. And anybody that says that you have to have wars all the time, I mean, just look at what's going on around the world. And China is instigating a lot of that. And I think part of what China is doing and Russia is doing, the BRICS are doing, is they're trying to break apart that Western alliance that's been in power since World War II, essentially, and has effectively had a monopoly on money and trade. And what happens there, Andrew, it downplays, it discounts the value of the commodity-producing nations so that the service nations get commodities at a discount, and they're not providing the value to those countries. So if you look at Africa, there has been, but basically a rape of resources over there. And I'm not talking just natural resources, I'm talking human labor. And that's something that's got to stop. We've got to stop the colonization. That's not going to help things. And it's that two-tier system, which I think China is ultimately trying to break apart, and why China is also negotiating with African countries and putting ports and building infrastructure. And they're not putting a lot of military bases. There is a base there has military capability, but China's not doing what the U.S. did in building 1,000 military bases. They're using diplomacy and trade. And I think that's their answer to what had been put into place, through the Western, especially the American military-industrial complex. And I think what we're seeing is a rejection of that. We're seeing a rejection of that philosophy, and we're seeing the rest of the world say, we want better solutions. And this type of solution is not working for us. Now, I do think we're in a period of great change, and nobody really has the final solution or the answer. But I think that's exciting, Andrew, because I think it gives us the ability to start talking about going back to systems that have worked. But adding new wrinkles to them to facilitate. So, for example, gold, silver being the backing of a currency that you can trade, but that currency is not a paper currency. It's something that allows faster, and those are the type of projects being worked on by private companies in the space that are actually providing solutions that are probably going to end up being more democratic, more liberal from a trade perspective, more inclusive from worldwide trade, and remove controls over monetary systems and democratize those. And so from that standpoint, I do think a lot of those private projects are going to have a lot of success. And I think people, when they see them, they're going to say, oh, this could be the answer. And I definitely want to participate in that. And I do see that development occurring around the world. The private sphere has decided they're going to take this problem on and address it. And that's the exciting thing, is you see that starting to go on around the world.
Yeah, and I think what is interesting, we've got so many pieces, if one only just looks around one's self, and there's so many little evidences of that. Now, for example, when the Russia, well, I call it the NATO war against Russia, commenced in March of last year, April of last year. What was interesting was part of this massive ill-thought-through sanctions package, which has massively backfired. And there's so many levels it's backfired on, including the gold market. But essentially, I mean, when it was imposed, Biden was out there saying, we're going to turn the ruble into rubble. Okay, what happened was Russia then placed a central bank bid out there for gold at a ruble price that was higher than the dollar-denominated price. And this massive flow of physical gold started flowing in for a natural arbitrage process. Who would not be in that field? Who would not want to exercise that? It was a risk-free profit. But that gold, as it flowed into Russia, suddenly you were taking what was one of many fiat crosses, and you started to back it with gold, more and more gold, not fully backed, but backing it with gold. And what happened? The inverse happened. It wasn't rubble. It became the strongest FX currency globally, bar none. And I think there's a lesson there. So that's a little example of when you start backing something with physical assets, whether it's gold, commodities, which is what you're talking about here, is creating currencies that are backed with physical. Look what it does. You're turning a fiat currency into something that is backed. And I think this is so interesting.
It is interesting, and what it does is it places natural economic law on top of government, so governments can't circumvent, because the biggest reason for big crashes is people in government want to do well, they want to do things, so they start bringing forward consumption. So instead of us being patient and building things as we go along, it's like, no, we need to do this now, and so you'll spend ahead. And you'll spend on things you don't necessarily need. It's misallocation of capital. But a natural commodity and natural economic law puts governors on government so that they can't overprint. And when we had commodity money, it was more stable in terms of inflation-deflation cycles, the business cycle, in terms of also external entanglements. If you want to talk about the United States being the policeman of the world, I would actually call them the bully of the world at this point. I think we have more bases around the world than many more than Rome did in its heyday. I don't know how you look at the United States and say we haven't been, at least in part, and this is being kind, very imperialistic towards the rest of the world, not only with our military basis, but our monetary system. And that was all made possible by the fact that we didn't have a natural governor on that. And if you don't want to see that happen across the world, and you don't want to see that geopolitical conflict, having commodity money is a big way to keep people from shooting missiles at each other and establishing bases. And it allows for more individual and national sovereignty at every level. And that's really the key thing. That commodity money, especially gold and silver with their 6,000 year track record, have shown that they do more to increase societal harmony and just productiveness and collaboration than do any of the other currencies we've tried. So I keep going back to it saying that's why I like it. You have less conflict, you have more honesty in the system, people are able to retain their labor. Andrew, when you have inflation, it's stealing people's labor because you put your excess money in the bank and that inflation reduces the power. That what you're doing is saying I'm reducing the value of my labor, of my individual contribution to society. That's not what we want to do. That doesn't encourage new business. It doesn't encourage development. It doesn't encourage society moving forward. What it does is create pockets of misallocated capital and destruction in the economy that actually affects people. And what we have now is that's been going on long enough that the underpinning, the foundation of the Western system is crumbling. And because we haven't had that honest money. And that's essentially what we're seeing now. And I'm hoping that as we go through this, what I think is going to be a currency reset and a financial system reset, that people understand and have been educated and say, let's go back to something that makes sense. But let's bring it into the modern age. We still want gold and silver, but let's do it in a way that facilitates trade that we need. We want smart contracts. We want instantaneous trade. That's where the world's going. Technology's here. So let's find a way to combine that technology and a natural, governor like gold and silver, or something along those lines. Those types of solutions appeal to me because it gives you the modern payment systems you need, but it doesn't remove the governor, that's preventing, these sorts of runaway situations that enlarge the business cycle and create more destruction. And that's really the thing is, if you look at basic investing 101 and just wealth generation, Warren Buffett said the number one rule to invest is don't lose money. And the number two rule is see rule number one. Well, what is inflation? It's losing money. You're guaranteeing yourself a loss. So that monetary supply underpins the ability of any society to develop itself. And that's why America's falling down right now, is the money supply has fallen down and our society is now falling down behind it. And that's why, and that's what's happened.
Yeah, and you're talking about that debasement, and I think so. This is why it's almost a no-brainer when you think that when you buy a bar of physical gold or a bar of physical silver or a coin, and you take possession of that, all the energy and labor that went into that is bought and paid for. It cannot be taken away. And I think, whereas, as you say, money in a bank, other than the threat of it being bailed in, is actually depreciating at multiple percentages. So, and as I say, taking away, as you eminently, as you beautifully described it, taking that away from you. And I think it's like anything. It's really a no-brainer when you think about it. I mean, no matter what you weigh up, it's not that gold is going up in price. It's just it's costing more dollars, more euros, more yen, more everything to continue to buy anything. I mean, in fact, the table that I'm sitting at is simply going to cost more dollars, euros, and pounds in a year from now, or even a month from now. It is simply because of the money printing. So, as you say, we have solutions. And there are multiple ways of looking at these solutions, from personal level, from the level of that you've just described, much higher level, which is, hey, what about these? What about sort of the BRICS currencies forming a commodity, of gold commodity-backed currency, using technology like blockchain, trustless rails, putting an asset-backed currency. Of course, it's fungible. It becomes fungible, like gold is fungible, like silver is fungible. It becomes fungible. These are amazing things. People, as you say, I'm glad you bring this up because it's important to understand this.
It really is. It's important to understand these concepts, and they never go away. A lot of when people want to funnel people into something else, the argument is always this system's broken, we need a new one. It's problem solution. They already have the solution. But I think we need to go back to the problem and what caused the problem. And I think when you examine that, it's clear to see that some solutions probably are not equal to others. And again, it's that understanding that really matters. And I think, what's going to happen is we're going to have increasing amounts of financial dislocation. And you were mentioning prices. If I go out to eat somewhere, it's now double what it was just a year ago here in Dallas-Fort Worth. And in Texas, we had always, we had 40, 50 years of price stability. Honestly, we never had bubbles in real estate. We were always very, because of the pro-business environment in Texas and more, I would say, libertarian leaning or freedom-loving state. We never had some of the problems before, but now we're starting to see it because the problem with the currency has gotten so pervasive. You start to see it in Texas. And we're seeing asset bubbles in real estate, and we're seeing prices, and people here can't afford to live. Renting an apartment that I lived in doubled over 4 or 5 years. I didn't live in it the whole time, but I mean, that's how quickly it's going. And it's really just not affordable to people. And the only way really to make up for that is to have something in your portfolio that captures that loss of value. And that's what gold does. It captures that loss of value and gives it right back to you. And that's why it's so important to have. And people will say, well, gold doesn't really do anything. Well, yes, it does. What it does is it allows you to maintain your labor. When you save in gold, you're saying, I elect government not to pay you your tax of my labor so that you can go spend on things I don't want. I elect to save my money in gold so that I can retain my labor. And that's why I tie gold to freedom or silver to freedom, is because they are freedom. It allows the people to store their value in something that will retain that value over time. And I think that's why gold and silver are making a reemergence on the scene. People are starting to talk about it. And even going back to the banking standards with Basel, they've formally outlined gold as a high-quality liquid asset. So the banking system knows, and they're capitalizing in gold. So from my standpoint, why wouldn't I do the same thing? Because that's what gold is. Gold is that ultimate store of value. There's really nothing that we've ever seen that's been better than that.
Yeah, I mean, absolutely. And those words should be listened to by everybody, because it is, what you're saying is that this is something, once you know this, then more fool you if one doesn't act on it, because these are real. This is real. This is exactly what, as you say, this is not fake. This is real. And yet what you're talking about is educating people enough to say, okay, now I know this. What's my next step? How much physical should I buy? How much physical do I need to onboard? And really, you know, obviously you need some cash for day-to-day living, et cetera, but to really start focusing on that. And I think you're talking about so many levels here, and we're also talking about this blockchain commodity currencies that China is now looking to consolidate, and certainly being a driver with Russia. And obviously these two big nations are getting together and really instigating. And we already saw Sparebank at the beginning of the year putting physical gold on the blockchain, starting, you know, all these signs are there. But I think China is now in a position where and you mentioned the Belt and Road Initiative a little earlier, this incredible pulling up of a barrier that, as you say, it's mind-blowing. This barrier was, I think this caught everyone out, certainly on this side of the NATO side of the world. And what it did was China now knows that what they're doing is going to ultimately result in sanctions. And they saw Russia, dollar being weaponized against Russia. And they're not stupid. They understand what they're doing. And they realize that by actually taking starting to drain US dollar hegemony, that actually creates an issue. So that, because the privilege of being able to just print money to fight wars and go all over the globe and just, as you say, be a bully around the world and literally profit from that is now being removed. And so what I thought was so cool about this Belt and Road Initiative is it opens up the Central Asian corridor and it provides sanction-proof overland connectivity between Iran, Turkey, and China. I mean, so that means that no longer can the ships stop you. You can't enforce insurance situations on ships. You can't do anything. This is a clear link. Linking these multipolar powers streamlines the process of allowing China and Russia to play a much stronger hand on the global stage.
They really do, and I know this may be hard for people to accept in the Western world, but I think China and Russia are leading the system that the rest of the world basically wants, because they're lining up in support of, and it's no longer the Western world, and that's a huge culture change that I don't think has sunk in to some of the powers that be in the United States. Seem to be oblivious to it, the media seems to be oblivious to it, and therefore the Americans, you know, absorbing that may be somewhat oblivious to it. But I think these changes are very strong. I think the world supports them. I think it's going to create a multipolar world in which you have different systems that exist. And China and Russia, if you look at their counterparties to SWIFT system and international wire transfers and things like that, they're still maintaining their connectivity to SWIFT. So China and Russia aren't saying, we're going to isolate, you know, America and your allies and you're not going to participate. China actually invited the United States into the Belt and Road Initiative. The United States declined, said, no, we got our Blue Dot network with Japan and Australia. So, there were opportunities for, the U.S. to get involved. And so the fact that, the regionalization around these commodities markets and the factions that have formed are really around different philosophies. You have the old, I would even call it maybe a mercantilist type of philosophy, neo-mercantilist, maybe something like that, that the West is falling. And then what you have in China or Russia is they're still centrally planned economies, but they realize it needs to be democratization of trade. And I think they learned the lesson from the West about how to incorporate free markets. And so they have their own version of free markets, and I think that's what the Belt and Road Initiative is. And, I don't necessarily, however, feel as though in the long run, we don't necessarily want China and Russia sort of running the world either. I'm more in favor of having different nations with their own trade agreements and their own, more democratic, and that the world has its own counterbalances. Because the problem with America when it had the dollar dominance, there's no counterbalance. We still have the largest military. We have the power of the dollar, and it's taken really decades for the rest of the world to get themselves out of that system. They got captured in it because they had our debt, and so they're stuck, right? And I think it works better in the world if you have different trading blocks and different currencies and competition, because that doesn't allow anyone to sort of distort worldwide trade flows and really put that pressure to where you're going to get all this antagonism you see around the world right now. And I do think China and Russia are part of developing a new system. I certainly hope that the West wakes up and jumps into that as well. I'm hoping that the politicians and see what's going on and they embrace that, and there's not too much antagonism. But I have a feeling the West is going to try to roll these systems out anyway, and it's probably going to fail on a number of levels. And I think it'll put the West behind the rest of the world in moving into this new era of trade that we're looking at, and digital technologies and things like that. And I think it's going to put America behind the eight ball. That's kind of my prediction. And I think America at some point is going to be running to catch up. But I do think the world's already voted. The world's voted on, we don't like this old system, we want a new one. And China and Russia have filled that gap. And to their credit, they filled that gap. I mean, they took on that responsibility. Whether or not they have the right solution, I don't know. But certainly, it's nice to see a different solution out there. And I think it gives a chance for us to maybe reimagine, the way that we interact with each other from a currency and a trade perspective. And I think for us to get along in the world, we need to do that. We need to, it needs to be a system which everybody can participate, everybody maintains their value, and then the people themselves are able to maintain their labor. So the monetary systems edify the people building it, and not just the people at the top, making the rules with the laws. And I think once you have that, you have that equal value, from top to bottom, and you have the ability for all these nation states to work together. I think that's ultimately what we'd like to see.
Yeah, and I think again, you're talking. This absolutely makes sense, and I think obviously for a true multipolar world to exist, we just have to take a step back and look at who has the real goods, the real commodities, the things that we use, the things we consume. And, whereas the Glencores and the big corporations of this world have gone in and literally, as you raped the resources of African nations, of global nations, and literally by having by being a part of being able to encompass a currency that is a commodity-based currency, and you have commodities, then you are going to be a participant in an equal participant or a graded participant in what was previously a unipolar world coming down, top down to everyone. But all of a sudden, you have power. You have a say because you have a commodity that other people want. And you then make that it becomes part of the digital currency, which is gold-backed, commodity-backed. And it's suddenly on the blockchain, it becomes a currency. It can be valued it can be traded on the foreign exchange markets like any other currency, but it's backed and therefore to be a strong currency. And I think this is the beauty of this, is that my hope is that it is truly a multipolar world and that Russia and China do follow through and allow a fair price to be obtained by people who have the resources. Now, history is history, But if you're sitting in the Congo and you're sitting on cobalt, you're sitting on oil, you're sitting on massive resources which have been robbed from you and purposely underdeveloped, and suddenly you have the ability to actually sell that stuff into the global marketplace, and become part of the multipolar world, we've got a whole different world coming up here.
Yeah, I do think we're entering a good period in which the world's going to see a lot of positive change, and it's interesting to see a lot of this development's going on outside. Even though the outside the U.S., even though the U.S. hasn't, quote unquote, fallen yet from being, top dog in the world, if you will, and their currency hasn't officially come off of being world reserve currency, I think from a de facto perspective, China and Russia are already leading, because that's where the development's coming in the world, and that's where people are folding into. So whether or not the dollar's already fallen, the U.S. has lost their stake as like the primary leader of the world. I think that's already happened culturally, and it's just financially, we haven't seen it, but the repercussions financially are going to come. And thankfully, we have some time to prepare for this. I do think there's things people can do. I'm not a financial advisor, but I always recommend getting out of debt. Look at gold and silver in your portfolio. Make sure that you're able to afford everything that you have, live below your means, understand that we're going to have inflation, but protect yourself with precious metals. And look for payment systems and things that will allow you to operate, because we're going to have bank troubles, we're going to have cash shortages and things like that. We saw it in India, we saw it in Nigeria when they switched over systems. That's what they do. They remove cash and put you in the new system. So just be prepared for that. And I think also capital controls. We're starting to see capital controls in Europe, 1,000 and 10,000, what's tracked, what's blocked. And I think those capital controls will come to the United States as well, just because of the currency issues. And when you have currency issues, capital controls come.
Yeah, I know it's stuff that we've got to, as you say, being aware of it, at least then you can start looking into your own situations. And I think what's also interesting is, now that we look a little bit shorter term, and looking at obviously the gold and silver markets as we see them now, and where the sovereign levels are, and where the paper market flows meet and cross. And what is so interesting is, since Basel III NSFR conditions kicked in at the first trading day of 2023, up until then they were not in place. They were certainly the first year banks were accumulating gold and silver for their own book, physical gold and silver for their own books. But I think one of the big mistakes, and I think this is an interesting dynamic, the Fed introduced a wall of paper gold supply in April of last year. Literal wall of it. Just at a time when you have a conflict where what should happen? All safe havens should be going up in value. And gold and silver naturally should have been rising, and they were. So what happens is you then dilute it with a massive wall of paper supply. What is interesting, though, is the Fed never closed most of those bets off. In fact, what was ludicrous is, just at the same time that the Bank of International Settlements was covering all 500 tons of their 2022 gold liabilities to zero in November. There was 100 tons borrowed, but that was by the Fed. But basically, the Fed is now literally holding the bag. They were shorting, believing that they could, not realizing how these sanctions were blowing back, what Russia would do, what China would do, what these land bridges were doing. The BRICS currencies coming into place, blockchain, gold going on. They not figured any of this. They were blind to it. Daniela Di Martino Booth is so smart cookie. And I remember she was on one of our shows, and she said, the Fed has no understanding. Zero. They don't even talk about gold. They don't even think they talk about gold. They don't. It's not on their radar. So obviously we have the plunge protection team. We have those guys who are orchestrating these things. But the Fed just has no clue. And putting that wall of paper gold into the market was the worst thing they could have done. And now they didn't cover it like the BIS did into Basel III compliant situation. So now they're screwed. They're left holding the bag. And obviously a lot of our clients say, oh no, well, you know what they're going to do. They'll always win. Sorry, But there's a certain thing called a physical supply. So if you EFP, you take a Comex contract and you EFP it into a Basel III compliant spot deliverable contract, which T+2 has to be delivered. You're a liquidity provider holding that spot position. You have to have it. Suddenly, you've got a wall that you cannot go beyond. You cannot just keep creating more paper gold, because all you're doing is allowing central banks around the world to fix that spot price, take it away, off the ring fence it goes, and into Russia, China, to back their currencies more and more with gold. And we know what happened to the ruble when that happened. So this is, again, people need to think about this stuff.
Yeah, one of the things that you highlighted that we do cover on the show is the EFP mechanism. And what happens is in the Comex, just to explain this for people who don't understand how the worldwide markets work, the Comex, the NYMEX, the four markets, the commodities markets that we trade here in the U.S., not every month is a big delivery month. So if you actually, and I don't think the exchanges were set up to be big delivery exchanges, because for years and years they were basically just paper trading, some hedging, some speculation. In the last 10 years, it's been more delivery, especially in the last 5. And if you look at it, people are going to that market to get supply. And a lot of it was because there were shortages specifically in silver, but I think they also wanted access. It's a good place to get gold in bulk. And so if you wanted to do it, you go there. And so the deliveries have gone up. But what happens is in Comex, there's only about 6 strong delivery months a year. The other 6 months really are just lightly traded. So the next big months in gold and silver are coming up, May, June, July. So in between that time, if you want access to the physical metal, you do the EFP, you take your US-based contract, go over, to the UK market. And I've seen those spike up tremendously. I've seen days in which you're having 7,000 contracts of gold move over, and I'm like, that's a tremendous amount. I've never seen that much. And what that symbolized to me, and maybe Andrew, you can clear this up because you know that side of the market a little bit better than I do, but it seems as though there is this incredible demand for precious metals in the US, especially silver, and that we don't have the supply. Either it's because we don't have it readily available, or it's just not there, and the numbers that we're looking at are not accurate. And it seems to me that people are searching around for delivery. One other thing I noticed is the delivery numbers on Shanghai and China have gone up. They're higher on average in the Western markets, but I think last month there was something like 77% physical delivery on traded contracts in gold, and that is tremendous. So there is a huge thirst for gold, physical gold and silver in the worldwide market, and the paper markets just aren't serving that right now. And that's why I think that we're going to have a huge uptick in the paper price, because at some point when those physical short, especially in silver, start, where you actually can't get the silver that you want and that word comes out, I think that you're going to go maybe bid vertical on the Comex market, and it would be a lot like nickel and the LME. It'd be very difficult to get access to it, and it may stop trading, and it wouldn't surprise me if we see that on the markets at some point in the future.
Yeah, and of course, and the beauty of this is they can't silo it anymore, because there's a global marketplace. As you say, you just pointed out Shanghai. There are other physical exchanges, and really, it's this bullion is leaving out. It's ring fence. It's leaping out of the ring fence, the CME, LBMA ring fence, and it's headed on a one-way journey. It is not coming back. There is no physical for sale for today into this sell-off. There was no physical for sale. And so really, other than what you can contain inside the little tiny fixed mechanism, which is really just this little siloed connection. And as you say, these EFPs, it is far cheaper for us to EFP a gold or a silver contract. But for gold, it's T+2 forced delivery. You can't even throw a big premium on it. Far cheaper for us to EFP it than to back up a truck onto the back of the Comex vault and then ship it back over by flight. And it is a hell of a lot cheaper. And it's easy. It's seamless. So, and really, this is the thing that people need to understand. Basel III, NSFR compliance, first tier asset gold is, and the liquidity is there, that you cannot just keep adding paper supply. And I think to those people that are worried and thinking, oh, maybe I should sell. No, sorry. I mean, stackers are just loving this anyway. But I mean, it's not a time to be selling. And I think the dynamics of the market has shifted And people said, oh, no, Basel C didn't do anything. Basel III didn't. Yes, it has. And I think it's only just begun. And it's only just, and why did the BIS square all their positions? And yes, we know that the Fed was stupid enough to actually go and borrow another 100 tons in December, to try and bolster their position. But all they've done is dig a deeper hole. So really, I think one has to give one's head a shake here and say, let's draw back a minute. This is not the old game. The paper market is now meeting the physical market. And people don't realize how important those Basel III and SFR conditions have made upon us.
Yeah, and I had a question for you, Andrew, on that. Do you think the long-term effects of the Basel requirements will, force that trade out of Comex? Because if they can't be compliant, doesn't that put the onus on the rest of the exchanges kind of pick up the slack? And does that put pressure on the American exchanges?
Well, I mean, ideally, you have to raise the price to where the physical price is. So if there's a physical demand at a certain price in the spot market, which is 10 times really bigger than the Comex anyway, if there's a physical price, if somebody's there to buy it, bring it on. And so you need to then raise your price to that level. And the Fed, look, all they have to do is print some bloody money. They just print enough money. Yes, they'll have to buy back these positions. Well, what it'll do is just force the price higher anyway. It doesn't matter to them. I mean, what? How many trillions? Rob, how many trillions have they printed already? You probably know that. I don't know that number. It's trillions, isn't it? How many in the last year? How many trillions have they printed?
It's trillions, and I think during the pandemic here, we multiplied, was it our M2 money supply by 5, or I think it was maybe M1 by 5, and M2 more than doubled it in a short period of time. Yeah, there's definitely a lot of money slashing around out there, and the biggest risk, I think, to the dollar is not the dollars held in the U.S., because it's only physically printed about 1.7 trillion, and the Fed just took care of a lot of that by removing a lot of that liquidity from the system in the bank bailout. So we think part of that's electronic, part of it's physical, but about $500 million or so got removed. I'm sorry, it was 550 billion got removed from the banking system in the U.S. And so now you have a situation where there's not a lot of liquidity, and it's affecting repo markets and things like that. It's going to affect the rest of the system, and that's really how that system is starting to crumble and crash. But the final risk, and what's really going to kill it, is the rest of the world rejecting the dollar, and eventually those, and I think it's happening right now, those euro dollars, which is any dollar held outside the U.S. Originally, they were mostly in Europe, but they're all over the world. They're called euro dollar accounts. It's any foreign held dollar are starting to make their way back to America. Because as these contracts get built out and as people trade in alternative currencies, gold, renminbi, digital renminbi potentially, and all these other currencies, the need for dollars is falling across the world, and those euro dollars are going to come back. And there's more physical dollars outside the U.S. than there is in. And so if you're talking about potential for a hyperinflationary episode, those euro dollars become very important. And prior to, we exported those dollars, we were exporting our inflation, right, to other countries. Now those countries are saying, well, you can have that right back, United States. We're good. We built our system. We don't need this anymore. And all that exported inflation, Andrew, that allowed us to operate the way we've operated the last 50 years, especially since Nixon took us off the gold standard, are going to flood back to the U.S. And the U.S. is going to get the brunt of that. And that's where probably that hyperinflationary episode is going to come from.
And I think the last thing that we've probably got time for, I'd be really interested in this because you're of that side of the pond. Now, obviously the mainstream media is glossing over the fact that, they're saying banking contagion is, it's gone away. And now, hang on, it seems that they're taking deliberate attention away from the commercial real estate markets, which are basically regional banks have provided 70% of the financing for that, and yet these same regional banks are, because the Fed increased rates so rapidly, for even if they feel comfortable with all this soothing talk, they're still getting a better rate in the money market funds, and so pulling liquidity out on the basis that the Fed, who's now talking about raising rates again, and raising the rates in the first place caused the problem. So how do you think this is going to wash out? I mean, obviously money market funds can be gated, so you can lose your money, which is what nearly happened in 2008, and they're saying it's nothing related to 2008. But what are your thoughts here? That's a final question.
This is basically just the collapse of the Ponzi system. So, if you, dating back to the 90s, there were laws made that allowed bank accounts and money market accounts to operate with almost zero reserve requirements. And certainly since the pandemic, we've had, I think the Fed has lessened some of the reserve requirements on regular deposits, but money markets almost have zero. And the way they did that was they take your regular bank account, they sweep it into a sub account, that sub account goes to money market, but there's almost no backing. So you get almost 100% investment. And of course, they're investing in more risky things and longer tailed things. That's the other side of it, is banks take money and, with a short-term liability, lower interest rate, but short-term liability, but they invest it in riskier assets with a longer-term timeline. And so if any of those assets run into trouble, they don't have liquidity for their customers. And that's a lot of what happened to Signature and Silicon Valley Bank and even Credit Suisse. Is it was that, but it was also the devaluation of the treasuries, because bank, if you look at even at Basel, debt is considered a high-quality liquid asset, debt of other banks. And so banks would hold debt, whether it be, commercial real estate debt or other banking debt on their, or treasuries on their balance sheet. And when interest rates goes up, the face value or the value of those, paper value of those goes down. And so they got into a point where they didn't have enough money to balance their books, and depositors got wind of it and took the money out. Why? Because banking is built upon confidence. And if your assets aren't as solid and you've lent that money out and you don't have that liquidity, people know that they're going to go get their liquidity, and that's what happened. And people are going to do that more and more as people start to figure out that we're going to have asset crashes, especially in treasuries, the dollar, things like that, real estate's coming down. It reduces the amount of support or solvency, if you will, of banks, of corporations, and so we're going to start seeing some failures. And that's what's going to happen. And that, it's just a crashing of that system. You blew it up and now it all has to come back down. It's the bubble has to burst. And again, Andrew, I think we're going to go back to what is real. Real people, real commodities, real things, and that's going to be the basis of the new economy. And I think over the top, we've just digitized that to facilitate that, make it more democratic and easier. And I think that new system is underway, but it's not quite ready yet. But I think that new system is being put in place. And again, it's not being put in through the West. It's being put in through other people. And so the West is going to be catching up to this. Not only are we catching up to the fact that our currency is going to crash and our system is going to crash, but we're catching up to the fact that the solutions being presented, we're not as far along on those as a lot of other people in the world. And this is typical. You see it about every 10 or 50 years. Sir John Glubb, I think, did research there in the UK for it. He had a lot of world experience. And about every 10 or 50 years, the dominant nation state and the currency goes through a reset and somebody else emerges, and that's what we're going through. But new systems emerge as well. And I think that's what we're seeing. We're seeing the emergence of new systems. And so this transition, was always going to take place. But now we're here. And so it's just a matter of letting people know this is what's going to happen. This is how you can protect yourself. And because at the end of the day, this affects people. In the real world, this affects every day. It affects me and you and our families. And even though this is something that repeats throughout history, or history rhymes at least, even if it doesn't repeat exactly, it doesn't mean that it's not going to affect us. It's not important to us, and I think it is. And I'm just so thankful to be on the show to help educate people about this, so that they can talk about it and maybe start thinking about ways in which they can work around that system and protect themselves.
And Rob, you're eminently qualified, and I know you're an auditor background. You've got a great deal of experience in that area. So when you look at stuff, you're looking at it from an auditor's point of view as well. And so people should take note of that. This is not just supposition. This is you analyzing. It's an algorithm that you have in your mind, and we're benefiting from listening to you because this is something that you have discerned using all that experience and input. So people should listen to you. And I really thank you so much for coming and spending a little time with us today. Rob, let's do this more often, because I think we covered only a fraction of what we could have. But let's circle back really soon, and we'll catch up with. Let's have a look at it from the other side of the fence, maybe in a month or so from now. It'd be really interesting. But thank you so much for coming and joining us.
Thank you so much, Andy. It was a pleasure.
All right. Thank you, Andrew Maguire and Robert Kientz from Gold Silver Pros. Thank you so much for another fascinating discussion. And remember, buy physical and make sure it's 1-to-1 physical, gold and silver. Understand the difference between what Andy affectionately calls the casino gold and silver markets and the actual physical gold and silver markets. They're not the same. Don't be fooled. So there you have it. That's all we have for you today on another episode of Live from the Vault. And please help spread the word about this channel by hitting that like button right there, sharing this information, and also hit the subscribe button if you haven't already done so. And if you want to be notified as each episode goes live, just hit the bell there and we'll do just that. And with that, we'll see you next time right here on Live from the Vault. See you then.